So, good morning, friends. Now, let me start the discussion. Who will be in charge of finance department? Hmm? How is that? What is the name through which he will be called? A person who is managing finance in an enterprise. What is the name through which he will be called? He will be referred to as finance manager, or in modern terms, he is referred to as chief financial officer, CFO. What should be the objective of this gentleman? Very soon, you people will be occupying that particular position. What should be the objective of finance manager or CFO? What should be the objective? So now I would like to rephrase my question so that you understand exactly what I am expecting from you. Leave this particular question. What should be the objective of a batsman? And what should be the objective of a bowler? What should be the objective of a wicketkeeper? All of them are in one team. Yesterday I was just started watching from 3 o'clock to night 10:30 or so. First match of India. I am also very much interested in cricket, and I watch latest movies also, and I just hear good music also, just like any other person. So, what should be the objective of batsman? Come on, anything other than the subject, people are ready to answer, and they are potent with facts. They will push it very fast. Vidya Shankar, hmm? Score runs. That is the objective of a batsman. Bhuvaneshwar, could you tell what should be the objective of, say, Bhuvaneshwar Kumar, the bowler?
Main motive is to control the runs and gather the wickets.
Hmm. Sarvana, could you tell what should be the objective of the wicketkeeper? Catch and stumping. Okay. Now, people say, as per your things, there is explanations. Now, let me arrange them and say how people having different objectives can be in a team. Ah, so these three types of people who are there in that team, they should have common objective. Only then they can be in a team. What should be the objective? Objective of the team, and every member will be exhibiting, is only for only one thing: win the match. That should be the objective. To reach that objective, that is a vision. What is the mission? What is the travel? Or I will put it this way: you can easily connect with your practical day, practical scenarios. Like last week, I went to Tirumala. The driver took one route, and I told, why you are going like this? Go this way. He took the other route. Two things people don't understand properly. One is destination, the other one is journey. People get confused between the two. Similarly, answer and solution, people confuse between the two. Third, vision, mission. Vision, VISION, vision. Mission, M, not machine. Mission statement, MISSION. These three can be placed in a table and you can compare them as they are all giving you the same sort of meaning. Likewise, here also objective is one, function is another one. What are the things I just conveyed to you? Destination, journey, or the route. Then what is the next one? Answer, solution, objective, function, vision, mission. They are arranged in such a fashion that you can correlate things like that. There can be one destination and there can be many routes available. Correct? There can be one answer possible. There can be many solutions for that. To reach Tirumala, I can go through Tirthani or I can go through Utukottai. There are two different routes that you have. Objective is only one. What is the objective? To win the game. Functions. Different functions you have. Scoring runs, taking wickets, taking victims. Vision is only one. There can be different machines possible. Likewise, I am asking you only one thing. What should be the objective of CFO? You people are trying to convey something about function. Don't tell about function. Tell about the objective. Efficient usage of finance and all that is only a function. But what should be the objective? It is something like you are talking about solution, whereas I am asking about answer. You are talking about journey, whereas I am asking question on destination. You are talking something about mission, whereas the question is about vision. Have you understood? Tell what should be the objective. There is only one objective, only one statement. You cannot be doing this, that and all that. That becomes function. Only one. What for you have come for the class? To have great knowledge on SFM or to clear examination? That's all. Are you clear about this? So what is that your parents will be praying? Hey, my child should clear CA. They will not be just expecting in SFM she should score 99. See, not that 99 is not required, but answer for that question is clearing the examination. Likewise, there is only one statement. Tell. Have you understood the question now? Now you can try. Karishma. This question at intermediate level itself you would be having in FM. Bhuvaneshwar.
Controlling the financial activities in
Wealth management. Controlling cost. Budgeting. Profit maximization. Profit maximization. சும்மா ஏதாவது சொல்லுங்க. Just try something. Very recently I have also attended to a class where I was seated among say 45 person who came for taking class was much younger to me. I didn't had any shy feeling to tell even wrong answer also. Tell. Don't think about thing. Participation is very important. Yes, I will come back to you later. Like Meenakshi. Profit maximization. Yamini. Asset. Asset management. Yes, Rekha. Profit maximization. Gajalakshmi. Yaari vada maata. Money management. Okay. So answer to this question, I mean the objective of the finance manager is to maximize the wealth of the shareholders. To the extent of what Saravana has conveyed, that it is wealth maximization, it is a general statement of all that answers. I consider that as the best answer. That is the only answer that is correct. So let me just ask from him as what he understands from wealth management. Then whosoever had said profit maximization will also be accepted as correct. Not correct that way. Wealth maximization, profit maximization are entirely different.
It's taking company as a whole, not like finance department.
Mm.
It's based on the company as a whole and the
Okay. Anyway, good that you have answered to the first question right. This one, the attempt is not that great. Anyway, so we'll just take it up. Yes, Rekha? Huh? Meka. M-E-K-A. G-H. Okay, Meka. So from where they just get the money? Where they get their earnings? Only from the company. Company earns from the profit. Okay. So I will not consider as wrong, but at the same time I can't accept as correct. So your explanation is falling in between. Now I will give you an explanation through a table. Just watch, do not copy anything on this. There are three financial plans a finance manager is having. There are three different choices he has to select. See, there are two things that he has got. Either he can raise through more equity, say 3000, and debt less 1000. In any case, 4000 only required for purchase of as an asset. Right. So I have three different combinations. What are the three different combinations? More equity, 50-50. Then next one is more of debt and less of equity. There are three combinations the finance manager is having. Earning before interest and taxation is likely to be the same because the asset may not know how it is financed. It will reflect its own quality, isn't it? Whether the asset would know as how it got itself financed so as to give a different performance to it. So the asset may not know as how the source was to purchase the asset. It will reflect its own performance. It is something like this way. You buy a pet, say puppy. Whether the frequency of barking will be different if it were to be owned money or borrowed money. It has got absolutely no connection at all. So that is why I told you that this subject can easily be connected to your day-to-day happening, and people will easily accept that earning before interest and taxation in whatever combinations that you have is going to be same. Let us assume some interest rate just to make it a significant one. I am assuming 20% as interest rate. That means 20% is to be applied on the debt amount so as to pay interest, that being 200, 400 and 600. Then earning before taxation is 1400, 1200 and 1000. Correct? Assume a scenario where there is no taxation. We are living in a place where there is no taxation. Let us assume that it is Dubai or UAE or any Middle East where they don't trouble you for taxation at all in terms of personal taxation. There is no taxation at all. Now, in this scenario, as a student of chartered accountancy, you are asked to select one out of these three combinations. I want all of you to select and give your reasons later. So, starting from what is your name? Karishma. F1 is what you would like to select. Bhuneshwar. F1. 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 Huh? Tax rate. Tax rate 0. I told you that we are living in a country where there is no taxation. Huh? F1. Okay. So now, what is a reason for selecting? Maximum earnings. 1400 is the best out of the three. How about others? I think you people would have just given the same answer. Huh?
Even we didn't perform well, we don't have to pay the interest so much.
Therefore, what is that you want to tell?
Yeah, the interest amount is less, so we can choose F1.
Interest amount is less. Therefore, you can choose
We are getting
F1.
after not we have to pay interest.
Huh.
But for giving shareholders, that is not a mandatory.
So
that is also
each one has got their own objective. So why he had selected F1 is not because of 1400, it is because of the least amount of interest that he is paying. So that is he based on which he is giving the answer. But let me convey, there is one important point on this. So I just take off from this discussion. Now I would like to take up another discussion, company A and company B. Net profit for these two companies being 400 and 1000. Which one of the two is doing better? Both are in the same industry. Which one is doing better? B is doing better because 1000 is better than 400. Now tell me as which company is doing better? Huh? A. But just now you people concluded that B is doing better, no? Why is that you are selecting? So now as a person not knowing about CA students, I find 800 is better than 400. 10,000 is better than, or I will put it this way. So 1000 greater than 400. 10,000 is greater than 800. Therefore, they should select B is what? As a general public, I would be expecting. But what is that you people have conveyed? Which one is doing better? Company A or company B? A. Now tell me on what basis you have concluded A is doing better than B? Percentage. Net profit ratio is what you call. Here it is 50%, sir, and here it is 10%. So 50% is better than 10%. So who taught you this? So you feel like, so you should not answer to the question based on number alone. You should go by ratio. Did you do that in this particular case? F1, F2 and F3. Did you do like this? Like what I have conveyed for the other example. Did you try like that? Let me tell you, you are not tried like that, because all of you have just taken up 1400 is the best number out of 1400 at 1200 and 1000. Now, I would like to put it this way, earning before taxation to equity. To whom this money will flow? Earning before interest and taxation, from their interest when I deduct, what I get is earning before taxation. Now, let me just work out this. So, 1400 divided by 3000, 46.67 percentage. 1400 divided by 3000. Here it is 60 percentage. Here it is 100 percentage. Now, let me ask the same question. Which one of these three financial plans would give you the best satisfaction? F1, F2 or F3? Huh? F3. But what is that you people have selected? F1. So therefore, that one which is considered to be with a good number, I mean earning before and taxation, there is earning before taxation, is not the best solution that you get. So always remember one important thing in life, as well as in financial management. We at school days and all that, we would have just experienced that. I have just experienced that. So when I just find when my mom's cooking is very good on a particular day, I ask, please put some more. My mother will be very happy to put, but she will caution me. What is that? If you derive satisfaction now, stop here. If you have something more, then the satisfaction level will be lesser than what you had. Have you experienced like that? So likewise, so more and more is not always better. So you need to evaluate like how you have done in this particular case. So greater the profit is not the basis on which you people have selected. You have selected based on ratio. But in this case, you have not selected the ratio, went on to select based on absolute numbers. So from now on, I am cautioning you, don't judge based on numbers. Bring out ratio. From the ratio, you select. Are you understanding, all of you? So your selection is not right. I don't want to use the term, wrong. The selection is not right. Okay. Now, in what way wealth maximization of the shareholder could be considered as the objective of the finance manager? Now, I would like to tell you that equity shares are issued at the rate of rupee 1 just for the sake of convenience. Let me know what is the earnings per share. What is the earnings per share? 1400 divided by this 3000 would mean 3000 numbers. It comes to 47 paisa. This comes to 60 paisa. This comes to 1 rupee. Are you understanding, all of you? Say yes or no? Right. We all know there is a term called as PE ratio, price earning ratio. There is a ratio that we have. Price earning ratio is market price per share divided by earnings per share. I want to know market price per share. Just for the sake of convenience, I am booking a constant number 444 in all the three. When debt equity ratios are different, PE ratio will also be different. It may be 4, 5, 6 and all that. If I am using 4, 5 and 6 and do some computation, you might say that because of me holding different numbers for PE ratio, the market price for the last one had just gone up. That sort of complaint people might just have. Just to avoid that, what is that I am using? A constant PE ratio. Are you understanding, all of you? So it could be 4, 5 and 6. We will learn that a little later. I don't want to use 4, 5 and 6. Just because I am using 6 in the last one, if I am getting greater number, you might not tell that the market price per share for the last one had just gone up because of better EPS and all that. People would immediately tell because of using a higher PE ratio, this had resulted. I don't want to take that sort of complaint. Therefore, knowingly well that PE ratio will be different, I am using same PE ratio just to protect that sort of criticism. Are you understanding what I am telling? So, therefore, I am using 4, any number for that matter. Why 4? It can be any number, but 4 I am taking for the sake of convenience. Now, what is market price per share? Earnings per share multiplied by PE ratio. 0.47 into 4. 1.88. 0.47 into 4. Then 2.40. And here it is 4. That is, one share of the company, if you follow F1, will be only 1 rupee and 88 paisa. If you arrange the equity and finance in the ratio of 50-50, one share will be worth 2 rupees and 40 paisa. Whereas, if you arrange that with more debt and less equity, the one share will be 4 rupees. Am I right? Now, as a shareholder, which one of these three you like the most? For one share at 1 rupee 88 paisa, 2 rupees 40 paisa and 4 rupees. Which one of these three you like the most? That is, one share that you hold in a company, if it is worth only 1 rupee and 88 paisa, worth only 2 rupees and 40 paisa, worth only rupees 4, which one of these three you like the most? F3 only you should be liking. Yes or no? Right. Now, in what way this is to be considered as wealth? Now I am going to tell what is wealth. What is wealth in this world? Wealth is that asset which can be converted into cash immediately is wealth. Yes or no? A person is a wealthy person. Our neighbor is a wealthy person. He had constructed ground plus 3. Unable to occupy, unable to sell. Unable to occupy because he had not completed the building. unable to sell also because it is not completed. He ran into trouble. I am not a financial advisor for them. I could just see. Can he convert that into cash? No. So, having real estate, that too very close to a prime location, he is not in a position to sell. Had it been a vacant land, he could have sold easily. He got into the trouble. But can you say he is poor or wealthy? He is wealthy, but he is not in a position to convert them into cash. All of you please remember there is big difference between being wealthy and being rich. What is the difference between wealthy and rich? Understood the question? What is the difference between rich and wealthy? Richest person, wealthiest person. God is asking a question. You want to be a rich person or a wealthy person? Niveda. God is asking questions. God means he will not have Chakram and stand before you to ask. Person who is just asking like this also is God. Not that I am proclaiming. So please. Huh? Wealthy. Wealthy person. Wealthy. Rich. So let me tell you, wealthy person may not have cash at all points of time. He will have assets. Rich person, even finance a wealthy person also. A person who is in trouble, who is not having money but asset. What is that he will be doing? He will sell the asset, he will mortgage the asset for the purpose of cash. Rich person will not have any trouble like that. So in FM, those assets which can be converted into cash immediately, only those assets we will take it as assets. Shares which are quoted in the market, we will consider that as close to cash. Now I will tell cash plus market price per share. As a shareholder, one share is worth ₹1 and 88 paisa. If I take this share and get it in the market, I will get ₹1 and 88 paisa. So therefore, shares in a listed company will be considered close to cash. Considered close to cash. So therefore, that way in this subject, wealthy as well as rich are having same meaning. Generally, they don't carry the same meaning. Then earnings per share. Let us assume that the company is having 100% payout ratio. What do you mean by 100% payout ratio? Whatever you earn, that will be declared in the form of dividend. So ₹1 and 88 paisa plus 0.47. How much is that? 2.35. Correct? 2.35. What is that in this case? ₹3. And what is that in this case? ₹5. Now, which one of these three you like the most? Tell. Which one of these three you like the most? F1, F2 or F3? F3. But people will be just looking at 1000 is the least profit. Don't get the impression when I am saying wealth maximization, I dislike profit. When I have asked you the question, which one you like the most? What is that Karishma was just telling? She likes the most auditing. Correct? What is that she is disliking? Costing and FM. You can't dispense with that. Even if you dislike it, you can't avoid it. Are you understanding? So those points of weakness should be made a strength. So when I am just choosing wealth maximization, don't get the impression that I can avoid profit maximization. Profit cannot be avoided. Profit is a source. But what should be the objective? Objective is wealth maximization. For batsman, you can score more runs. On the other day, myself and my friend debated, fought, but yet we will be friends. What is that? 2 centuries scored by British, that is Englishmen. They will never get defeated. I said, don't have this sort of theorem. Look at 5 batsmen of Pakistan. All of them scored first 5, more than 50. Look at the last 2 batsmen that they have scored. 10 runs and 10 runs. 20 runs they have scored in 10 balls. 10 deliveries, 20 runs. Finally, England lost the match by 14 runs. What is very important is the spread of strength to all, whereas in England it was not like that. What is very important, what is to be learned is very, very important. You should have number one. Most like, see, all that points what I've gathered is only for the subject, not that I've just conveyed it just for the sake of learning. So, please understand the wealth maximization on which 2 rupees and 35 paisa gave the least wealth, but which gave you the maximum profit. So, profit maximization should not be the objective. So, each shareholder will be having 5 rupees worth for one share, but that does not mean I dislike the most. Are you understanding, all of you? So, don't go by what? Absolute numbers. Go by ratios in conclusion. Very simple. Don't go beyond this. Okay. So, now you can start noting down from here. Then one more thing, let me tell you. If a finance manager wants to have his objective as wealth maximization of the shareholders, is he employed by the company or with the shareholder? He will draw salary from the company, but his objective is to maximize the wealth of the shareholders. Then it becomes a divided loyalty. What do you mean by divided loyalty? Huh? But from where he is drawing money? From the company or from the shareholder? So therefore, I draw salary from the company, but I should be loyal to shareholder. So don't you feel that this is having some problem of ethics? Yes or no? Say whatever troubles that you just get, no, you please throw out. So this sort of trouble I had when I was just learning the subject for the first time, because I am basically an accounting man, because entity concept says that shareholder is different from that other company. So then I found that there is no such concept in FM. In FM, company and shareholders are one and the same. So therefore, in this class, for SFM class, we will have a different objective. For FR class, different objective. So please be careful. So wealth maximization of the shareholder and wealth maximization of the company are one and the same. So drawing salary from the company and being loyal to shareholder is not to be considered as a problem on ethics. So both are same. I am working for the company, I am working for the shareholder, both are same. It is something like you like your dad most. That does not mean you dislike your mom. When I am just saying wealth maximization should be the objective, that does not mean profit maximization I don't like at all. So always remember that. So which are all same? Destination, answer, objective, vision are same. Then which are all the other points? Journey, solution, function, mission are all same in their substance. In a firm, there is no entity concept. That is to say, company is equal to shareholders. Is it okay? Are you understanding now? So in any place when they ask a question, what is the objective of finance manager? You have to say that wealth maximization should be the objective of the finance manager. Okay. So now we understand objective. What are the functions? What are the functions? Have you understood now what is a function? So in order to achieve the objective, what are the functions? In order to reach that vision, what are the mission that he has got to take up? In order to reach the destination, what are the different routes that he has got to take up? Come on. What are the functions of a finance manager?
Proper utilization of resources.
Hmm?
Proper utilization of resources.
Business?
Resources.
Hmm. Then? See, remember your cash book. Unless I have money here on the receipt side, I can't spend. You are talking about spending, proper utilization of resources of the company. No, you have to create resource. First thing, what is that you should do? Procure finance at the most economic cost. Correct? Unless I have resource, there is no question of managing the resource. Ensure proper utilization of finance. That means put them in the correct project so that you get more profit. Correct? See. Then in the cash book, receipt side I have conveyed, payment side I have conveyed. Can we say only two functions? Let me tell you that there are four functions he has got. What are the other two? One more thing that you should observe in our class. I mean, before coming to the class, have something before coming to the class. Even if it is a little early, please develop that practice. If you are coming empty stomach, you will tend to not listen to the class properly. You get into dosing mode. Yawning is also prohibited in the class. Yawning. Snoring is not permitted. Sleeping is permitted. Come on. So, in order to have a good listening, coffee is not a breakfast. Have something and come. I am just telling in your interest. If I were to be very rich, I will offer you as a package even breakfast also. Come on, tell. Third, Gajalakshmi. Third, Karishma. Maintenance of books, finance manager. No, that will come only for accounting. Preparing budget for future. Not correct. Huh? Investment will come in B itself, proper utilization of finance. No, no, no. That is objective itself, it is over. Function. Say now I will put it like this way. Forget about this. I will give you some hint. You are starting from your uncle's place. You are reaching home. Your uncle is just telling, by the time you just reach, please text me. What is the reason? So safe passage is what they are expecting, no? So always we just also do that when we just move from one place to another place. We just say we have reached safe. Likewise, here also finance manager should do important thing. The place where he had taken the finance at the most economic rate and proper utilization, then what is that he should do? He should go back to them and compensate them at the right points. To debenture holders, he has to pay interest warrants. To equity shareholders, he has got to give them dividends. So, third one is compensate the funders. What is that? Compensate the funders without their calling. It should be your duty that you have got to pay them at the right time. They should not be reminding to you. That's bad. Am I right? Say yes or no? If you have issued a, that is, if you have just taken up borrowing, you should release them post-dated checks at the time of initial borrowing itself. That is what you call them as coupons. The debenture holders should not be calling, sir, where is my interest warrants? At the time of borrowing itself, along with the certificate, debenture certificate, I will give them PTC. If it were to be 3 years, 3 PTC I will issue. They don't have to call me. Are you understanding? Compensate the funders. This is a function. To the shareholders, you have got to pay them bonus shares and you have to give them the dividends at the right times. Interim dividend, final dividend, without any delay. Observe industrial practices, please be a pioneer on that. Then D, tell. Final one, it should be a punch. Okay, I will put it like this way. What is our class timing? 6:15 to 9 o'clock. Today 7 o'clock, but I came by 7:15 only. So, what is that a teacher should do? Should come in time. Not only the first class, but in every class. So, therefore, one of the important function is to achieve the objective every time, not only once. What is that? Achieve the objective not only once, every time. That means you should not forget the objective at all. That becomes a function. Are you understanding, all of you? So, what should be the objective, all of you? Wealth maximization of the shareholders. Okay. Then, what are the functions? Easy, no. See, what is very important is that from the classroom straight away to the examination, certain things you should remember. Certain things you have got to practice and then go to the examination. So, what are the 4 important points, Gajalakshmi? First one. Second point or first point? First point you have not completed fully. Secure finance at the most economic cost, cheapest cost. Second one, effective utilization or proper utilization or effective utilization of funds. Third, Meenakshi. Yamini. Compensate the funders. Last one. Every time. That's it. Come on. Kindly just make note of this. Functions of a finance manager. So, the question is more, what should I say, targeted to people who have not visited or did not like or omitted this. For others also it is very good topic. So, now I would like to take up a scenario, cost of the project. That means in capital budgeting, let me ask you the question, especially Vishnu Priya. What do you understand from capital budgeting? It is not a test on you. please do not misunderstand when I am asking personally a question on the subject. Don't misunderstand that I am testing your knowledge or something like that. Just to make others also feel that we carry same understanding or different one. Don't ever feel that our answer is wrong and all that. Participation is more important. What do you understand from capital budgeting? You tell whatever a little that you know, you please tell. Okay. Capital budgeting should be understood as capital expenditure budgeting. That word expenditure is not seen at all. Actually, it should have been capital expenditure budgeting would have been an appropriate title. When it gives you the title as capital budgeting, people might misunderstand that it is all about how capital is to be raised. So I went on to just check up as why the title has come. In this topic, not only we talk something about capital expenditure budgeting, we also look into the source of raising the money. So therefore, they thought that if expenditure were to be there as title, people might understand that it is all about buying an asset or not to buy an asset, replace the asset and all that. Actually, this chapter has got both expenditure as well as raising the money. Are you understanding? So, both the functions of the finance manager will be covered. How to raise the money and how to effectively utilize. Now, let me just take up a project. Cost of the project is 1 lakh. Correct? Then, what is the interest? Interest is the cost of capital. If you raise combination of these two, you call that as weighted average cost of capital. If you have 100% finance only by debt, the interest that you pay becomes the cost of capital. Let us assume that it is 10%. Right? Debt 100%. That means the entire cost of the project is financed only by borrowing. No equity is placed. 100% financed only by borrowing. Year 1, 2, 3, 4. Profit before interest and taxation. Let us assume some numbers. Assume that there is no taxation, you have only interest. Or I will take up principal outstanding. Principal outstanding will be 1 lakh. How come? How come? Because cost of the project is 1 lakh, 100% finance would mean the borrowing outstanding will be 1 lakh, isn't it? What is the interest that will be paid? Interest will be paid as 1 lakh multiplied by 10% round. So what we round off now in calculator, that is what I just done. Then how much is the principal repayment? How much is the principal repayment? In 25,000 rupees, if I pay interest, what is the sum that will be available before the shareholders? 15,000. Then what a wise man will do is, with that money, he will repay the loan because he had not put the money. So therefore, he cannot be putting his hand as an equity shareholder. Are you understanding what I am telling? So the owner of that particular company had not put his money there, 100% borrowed. Therefore, after paying interest to the lender, that money he is not wanting to take because he has got 1 lakh of rupees outstanding. Then what is that he will be doing? So with that money he is going to repay. So what will be your closing outstanding? Closing outstanding will be 1 lakh minus 15,000. What will be the outstanding at the year beginning? 85,000. Am I right? What will be the interest? 8,500. What will be the repayment? 26,500. How come? 35,000 minus 8,500 is 26,500. What is the closing outstanding? 58,500. Here 58,500, 5850 principal repayment closing. Then how much is the outstanding? Principal repayment will not be 55,000 minus 1,935. How much will be the principal repayment? 19,350. What is the sum outstanding? It is going to be 0. Am I right? Now, all of you closely follow. What is the amount attributable to equity shareholders? How much is the sum attributable to equity shareholders? PBIT minus I minus principal repayment. How much is that? 0, 0. And how much is that? 33,715 is the sum available to equity shareholders. What is this? 33,715 available to equity shareholders. What is this? This is the sum available at what time? At year 4. At year 4. Today, what is the value? What you get as 33,715 4 years later, what is the present value? How do you find out? You know, future value is equal to present value into 1 plus r to the power n. Do you know this formula? Yes or no? So, 33,715, am I right? Equal to present value I do not know into 1 plus 0.10 to the power 4. Do you know this? Say yes or no? Yes. So, 33,715 into 1 divided by 1 plus 0.10 to the power 4 equal to present value. Correct? So, 33,715 into 1.1 to the power 4 equal to PV. This is what you call it out as PV factor. You know the calculator. You know how to find out the PV factor. I mean the rest of the class except these two. I mean Vishnupriya and Meenakshi. Because they were not troubled under examination conditions. So, one more good thing is that in final new syllabus, you don't have capital budgeting at all. But without learning, you can't go to any topic in this particular subject. So, you got to learn. What is that? 1 divided by 1.1, 1, 2, 3, 4. How much is that? 33,715 multiplied by 0.6830 equal to, what is that? It is 23,027. What is this? 23,027. Huh? Present value to shareholders as of now. Am I right? Okay. Now, I would like to try this problem, just what we did in our intermediate level. PV factor 1 divided by 1 plus 10%. Correct? What is this? In calculator, what you are doing PV factor, that is what I am doing. PBIT or cash inflow. This you call it out as discounted cash flow. What is that? What are the two things that you will be multiplying, all of you? PV factor and PBIT. Correct? What is that then we will be doing? We will sum up 1,23,026 discounted cash outflow. How much is that? 1 lakh of rupees. What is that 1 lakh of rupees? The cost of the project. What is this? Net present value is what we will be calling. What is the name through which you have called this? Present value or the money attributable to shareholders. That is what we were calling it out without really knowing the real meaning, and we are calling that as NPV. Are you understanding? Say yes or no? Okay. Now tell me what do you mean by NPV? Without knowing NPV, we have got one number. Later on, we have just got that as NPV. This one is easier to compute, but we are not knowing what exactly this number is meaning for us. But we understood here what is this real meaning. Now please connect these two. That is why I told you this subject can easily be connected. Anybody can easily understand, provided you live in the class, not seated in the class. You should live in the class. You should closely follow what I am telling. What do you say, Gajalakshmi? Classல இருக்கணும், classல வாழணும். What is that? You should live in the class. You should closely follow what I am saying. See, what will happen is that mind will wander. It will go to unwanted places. I was also attending to the class. My mind was just there in the office, client. When the sir was just telling, he was asking a question. And he said, sorry sir, my mind was there in the, I have not attended class in Chennai. I have attended the class in Coimbatore. 5 weekends I went, Saturday, Sunday, I went there. In one of the Saturday, Sundays, one of my ex-article students' marriage took place closer to Ernakulam only. From there I took the trouble of taking one taxi, went there. All that will happen. I mean, there will always be a challenge at our personal friend, office friend. Despite all that, we should clear the examination. So, once you come to the class, forget about all this. You should live in the class. So, 23,027 is nothing but what? Present value of money available to shareholders. Greater NPV is going to be greater wealth to shareholders. What is your objective? Wealth maximization to the shareholder. Your NPV is nothing but what? It is not the project. It is not the project's NPV we are talking about. It is nothing but the wealth that you are creating towards equity shareholders. What is the objective I told you? What is the objective I told you? Wealth maximization of the shareholders. From where we have picked up, this money is available to equity shareholders. Present value of that is NPV, and that is what we have got as NPV without really understanding what was NPV at all. So what is it we were learning in intermediate? Multiply cash flow with PV factor, you just get NPV. What is this NPV? NPV is nothing but wealth that is created in favor of shareholders. Have you understood? Now let me ask you one simple question. You can copy it, no problem at all. You can copy it, no problem. Even if we are not copying, in the next class also we can copy, no problem at all. The learning is very important. Supposing I don't pay interest then and there. I want to pay the interest alone, but repayment I would like to make it only at the end. I would like to pay interest then and there, but I don't want to repay the principal then and there. I want to pay only at the end. If I do so, whether the money that I would have at the end of the 4th year will be different or will be same. Have you understood my question? So, here I am paying principal as I generate income and I repay and pay lesser amount of interest in the years to come. Instead, I would like to repay the loan only by 4th year end and pay interest whatever outstanding throughout the period. Will I get the same number of 33,715 or different number? Huh? Calculate is different thing. It will be different. Huh? Different number. Different number. Different. 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 Do you know what is the answer? It will be same. Now, I will put it this way. I don't repay the money. I don't repay the money. I don't repay the money. But I pay the entire 1 lakh. Then, sir, this number is different is what that is we people have just conveyed, but you are getting a different number. Closely follow. If 10,000 is paid, principal not paid, where this 15,000 rupees I will be keeping? Where is this 15,000 I will be keeping? Or I would just put it this way, I don't pay even interest also. I would like to pay all the interest in one shot. Bankers are paying like that, no? They take the deposit, 3 years later they pay interest as well as the principal at the end, cumulative time deposit and all that you have. So interest also I would like not to pay. So I would like to pay interest at the end. Will I get the same number? I will just not use this Excel. I would like to take it up like this way. 1 lakh into 1 plus 0.10 to the power 4. Am I right? I like to pay interest for 4 years as well as the principal. What is the formula for that? Future value equal to present value into 1 plus r to the power n. I take 1 lakh of rupees now. 4 years later, how much I will pay? 1 lakh plus interest on interest on interest and all that I will pay. How much is the sum that I got to pay? Come on. Use calculator. Correct? Say yes or no? So, I would like to pay 1,46,410. Instead of paying intermittently, I would like to give them one shot payment, 1,46,410. Okay, I wanted to copy this. I don't want to lose the data. One more sheet I am just kept. So here I pay no interest, I pay no interest, I pay no interest, I pay no interest. Instead, I would like to change the format in this fashion. Years left. How many more years left? At the end of the first year, how many more years left? 3. How many years left? 2, 1 and 0. Am I right? Say yes or no? What will be the maturity value by year 4? Same like 25,000 into 1.1 to the power 3. Am I right? Say yes or no? This amount of money I am keeping it elsewhere which will fetch the same rate of interest, 10%. How much money I will have? 1,80,125. Sum of all maturities. How much is that? 180,215. Correct? So, this is the sum of all maturities. This is the sum that I got to pay to the lender. How much is available to equity shareholders? Take the calculator. 180,215 minus 146,410. Am I right? 180, 125 it is. Extremely sorry. How much is that? 180, 125 minus 146, 410. How much is that? Are you understanding, all of you? So, but what was the illusion under which we are living? It will be different. Actually, it is not so. It is not so. Are you understanding what I am telling? So, the repayments that you make at various places or various times at which you are just doing, if you are bringing out your investments at the same rate of cost of capital, you will not have any difference at all. Let me tell you. What is the rate at which I am paying? 10%. Whatever money that is available here, I am talking about this 25,000. How this 33,275 is coming up? It is 25,000 multiplied by 1.1 to the power 3. Here, how is that we are getting? 35,000 multiplied by 1.1 to the power 2. Here, 45,000 into 1.1 to the power 1. Am I right? My rate of payment is 10% to my lenders. I am also generating my intermediary cash flows. How many cash flows are intermediary cash flows in 4 years project? First 3 years are to be considered as intermediary cash flows. Why? The last year's cash flow, we don't call it out as intermediary, we call that as terminal cash flow, because I don't have any period for reinvestment at all, because I am getting at the end. Whereas all these cash flows I am getting at various stages within the project, but not at the end. And all these cash flows I am getting some years of reinvestment. First cash flow will have 3 years of reinvestment. Second cash flow will have 2 years of reinvestment. Third year's cash flow, I have 1 year of reinvestment. What is the rate at which I have reinvested all this? At the same cost of capital as I have experienced. So therefore, in NPV, we bring out an assumption. What is the assumption that we bring out in NPV? In NPV, it is assumed that intermediary cash flows are reinvested at cost of capital. Are you understanding, all of you? What is the assumption that we are making, all of you? What is the assumption? Why at all you should get the same answer? The rate at which we are experiencing our cost of capital is the rate at which the intermediary cash flows are reinvested. So therefore, whatever expenses that I would be incurring is matched with the income that I would be generating if I invest all this intermediary cash flows elsewhere. If I were to earn at a rate different from that of the cost of capital, maybe if I am very fortunate to get 12% rate of return for the intermediary cash flows, I may end up with greater amount of NPV. Are you understanding? And no businessman will reinvest at a rate lesser than the cost of capital. If I have borrowed at 10%, the money that I am just getting from my business, I will not put in any business which will give me lesser rate of return than the rate at which I have borrowed. Are you understanding? See, it is all a common sense only. I will not spend more than my income unless I am having a support of some politician, or if I were to have Vadra as my friend. No work but get money. Is that possible? Only one would be possible. Mother-in-law being Congress High President, brother-in-law is also doing something like that. I don't think so. Everybody will have that opportunity of making money like that. You got to earn. So therefore, when my borrowing rate is 10%, I should not be reinvesting at a rate less than 10%. I should not be reinvesting at a rate less than 10%. I will be the biggest fool in the world. If I borrow at 10%, I generate some amount of money from the business. That money, if I have to reinvest, I should not reinvest at a rate lesser than 10%. What best thing I could have done? I could have repaid the money to the lender, and thereby I am avoiding the interest cost. Therefore, avoiding interest cost is as good as generating income. Avoiding a cost is as good as generating income. How come? So I will put it like this way. Your mother is just giving, your parent is giving 100 rupees as your pocket money. Right? because it will be a spending for you that day. You find your cousin is just taking you dropping, and that amount of expenditure you have not incurred at all. So, expenditure avoided is equal to income earned. Am I right? Similarly, when I am repaying my loan at the rate of cost of capital, when I am repaying, that is what you have seen in this particular case. How much is that first year's interest rate, interest amount? 10,000. What is the interest amount for the second year? 8,500. How much is the saving that you are making? 1,500. On what basis? Because I have repaid 15,000 rupees principal at the rate of 10%, I am having the reduction in interest. So, interest cost saving is equal to income earned. Says or no? சொல்றது புரியுதா? So, interest cost saved is equal to income earned. My income earning rate is 10% because my cost of capital is 10%. I should not reinvest at a rate less than my cost of capital. When I am undergoing 10% cost of capital, I should not invest in any business which will fetch me lesser than my cost of capital. Are you understanding? So, at this moment we will just leave, we will just do a lot of research work on that in the next class to come, and you may take note of that.